welcome everybody. Let's have a great conversation to wake you up from your lunch, hopefully. Critical minerals are in the headlines every day at the moment. We know that they're in high demand for green technology, the green transition, for AI and the infrastructure that is needed for this, the spending in defense, all these need these minerals. The International Energy Agency predicts that the demand for critical minerals could at least double by 2040, and all this at a time where we know that the international trade and geopolitics are more complicated than it's been in a long time. So thankfully, we have someone that's right in the middle of all this. Mike Henry, CEO of BHP. BHP, the world's largest miner by market cap, $150 billion. So you became CEO in January 2020. What a timing. It's been very quiet since then, I'm sure.
Just before COVID, and it's never let up.
Absolutely. So COVID and the multiple challenges since then. How challenging was 2025, given particularly the geopolitical changes that we saw in 2025? Was it the hardest year yet?
So it's a really interesting question, actually, because, of course, a lot of uncertainty, volatility in markets, new policies being enacted around critical minerals on the back of geopolitical tensions. But at the same time, for the first time in a very long time, as you were highlighting earlier, critical minerals is now front page news. And it's been building for the last few years, but I've been in the industry now for 35 years. And for almost all of that period, mining wasn't in focus. Nobody really wanted to talk with miners. And there was very low public or policymaker awareness of the importance of critical minerals. And all of a sudden, that's exploded into the focus that we now see. And that's very welcome. But yes, of course, there's been challenges to overcome and uncertainty. But we're a company that's set up well to deal with that.
So we'll dive into all these challenges. If we can focus first on copper, because we know that is the one that is really, really needed, as metal had a record-breaking run this year. And some analysts say that 2026 could be the year where we actually see a proper crunch when it comes to supply. So I want to get your view on copper. I know you have the largest copper mine in Chile. You're trying to acquire more assets potentially. So just give us a picture on what copper was like. Are we heading towards a crunch?
So let me start by saying that copper is critically important. So it underpins the functioning of the everyday economy. It's also important for decarbonization and digitalization. It's about a $300 to $400 billion per annum market versus rare earths, which you all would have heard about, which is about $20 billion per annum. So it's a very large market. Demand is growing strongly. We expect it's going to be up by 70% between now and 2050. But supply is becoming more and more difficult to bring on. Fewer mines are being found. The mines that are being found are oftentimes smaller, lower grade, in tougher jurisdictions. And so it's hard to bring those mines on quickly. And what we've seen in the course of the past year is the market go from a slight oversupply. So if you roll back 12, 18 months, people were expecting that this year was going to be a little bit soft. And all it took was a few disruptions at a few copper mines around the world to all of a sudden send the market into deficit and to see copper prices reach record highs. We're expecting that between now and the end of the decade, that crunch is only going to get tighter. Now, BHP is the world's largest copper producer. We've grown by 30% over the past 3 years, more than any other company in absolute terms. And we've got 4 big major growth projects in copper around the world. And so it's a pretty exciting time for us. But a critically important time for the world as we seek to bring on more copper and other critical minerals to feed ongoing growth and some of the big transformations that are underway around the world.
So in terms of pricing for copper, I saw a note from Citi just a couple of days ago. They see copper hitting $13,000 per ton in early 26 and even $15,000 by the second quarter. Is that the scenario that you're looking at, and how sustainable is this?
So it's always very difficult to predict exactly where prices are going to go. What I can say with a high degree of confidence is the market's tight right now, and it doesn't take much to send prices north. And we've seen for different reasons a near doubling of gold price over the past 12 to 24 months. We're seeing that spill over into silver now, largely driven by economic factors or uncertainty around the US dollar. In the case of copper, of course, you've got the supply and demand dynamic that I mentioned. But in addition to that, you've got growing attention in the broader basket of commodities that could be supportive for copper pricing as well.
Another element around copper was the stockpiling in the US. There was some fear of potential additional tariffs coming further down the line. Again, what's the scenario that you're looking at and preparing for on that front?
So Tariffs introduce uncertainty to the markets clearly, and uncertainty is never the friend of investment. Having said that, we've seen tariffs enacted in the U.S. only for downstream or finished, semi-finished products in copper. Copper cathode, unrefined copper has been exempted from tariffs. And so I think that for the time being is past. There's still some uncertainty out there, of course. But even if those things are put in place, it doesn't change the fundamental nature of global copper demand. You see the reordering of some markets, price differentials arise, but basic demand for copper is so resilient, and it's only heading one way, and that's north for the coming decades.
And I guess a challenge for the mining industry is the cost, because you currently investing $10 billion to upgrade some of your mines, but you have to put a lot of money out, invest that money, before getting returns on that money often. So again, how are you navigating this? So
these projects, for those in the audience who aren't aware, to bring a new deposit, copper deposit, and the same thing can be said for some other critical minerals, this is a 15 to 20 year prospect between when you first find the deposit to when you invest and then you see first production. And oftentimes these mines will be $5 billion or $10 billion to develop. You then need a period of 10 to 20 years of certainty to recoup the initial investment that you've made. So these are very long-term investments. It's why one of the things that I advocate for when I'm meeting with policymakers around the world is policy clarity, stability, and certainty. Because without that, it can be hard to make some of these big investment decisions.
And one way that you're making these big investments, a lot of miners are divesting from the non-core assets. You had some of that recently. You sold some of your power network. So how much more of this kind of asset disposal and review of your portfolio are you doing in order to have that money for investment?
So you can't stand still. I think in any business, but BHP has been around for 140 years now. And one of the things that's allowed us to survive for that time and thrive is the fact that we've constantly reinvented ourselves. And part of that reinvention is ensuring that we're in the right commodities that stand to benefit greatest from the mega trends that are playing out in front of us. So if I go back 20 years prior to the economic transformation that's occurred in China, iron ore was the commodity that you wanted to be in because China was going to need lots of steel. Going forward, we're saying our iron ore business, lowest cost iron ore business in the world, will continue to be a great business, but the growth opportunities for us are in copper and potash as the world moves to transition the energy system, to digitize and so on. And so this is something where we are constantly reinventing ourselves, getting rid of certain businesses. In the past few years, we've spun out of oil and gas. That was a $20 billion demerger. We've halved the size of our coal portfolio. We now only focus on the best of the best coals for steel making. And at the same time, we're investing in major growth in copper and in potash, which is a fertilizer needed for sustainable agricultural production.
So we can look at the US in particular. There was a big change, of course, this year, the return of Donald Trump to the White House. You were in the Oval Office yourself in August. There's, of course, big talks around the Resolution copper mine, a joint venture with Rio Tinto that you have there. Earlier this week, the White House saying it plans more historic deals around the mining sector. So how much of an opportunity now is the US for you?
What a strong statement of support for the industry, that you've got the US administration, the President of the United States, meeting with mining companies and saying that they want to stimulate more investment in mining in the U.S. and more investment in processing. That is such a welcome level of support. We see it in other countries around the world as well, but the support in the U.S. has been particularly strong, both visibly and in terms of taking action to facilitate new investments. From a BHP perspective, the opportunity that you mentioned is the Resolution Copper Project, one of the biggest and best undeveloped copper projects in the world. It could supply 25% of the U.S.'s copper demand for decades and when it gets up and running. It's held up right now in a court process, but if and when that gets resolved, then between ourselves and our joint venture partner, we're quite keen to progress that project.
So what's the timeline that you're looking at potentially? Because I know there are some legal problems and things that need to be solved, but what's the timeline that you're
and it's we would have been ready to go at the time that we were holding that meeting in the Oval Office, if not for an 11th hour injunction. And it's very hard to predict when these things get cleared. But it's something where there's further work that has to take place on delineate or characterizing the resource, so understanding the ore body before we can take a final investment decision. But we'd look to do that as quickly as practically possible.
So from the policymakers that you are meeting, how are they changing their behavior towards mining? Like, do you see, in terms of regulation, in terms of permit processes, in terms of tax incentive, do you see now that there's this race for these resources that they are changing their approach?
So first of all, it's in some countries, it's not in all countries, and it's all of the above. So if you look at the US, the focus has really been on visible support, seeking to streamline some of the processes and to make decisions happen. You look at Canada, the new Carney government there has put in place something called Bill C5, which is it's not intended to reduce any of the standards. It's to ensure that companies are able to meet those standards and permitting requirements in the most efficient, quickest manner possible. And that's important when you're investing these billions of dollars, because time is money, and it's also risk. And so the faster that you can get through some of these permitting processes whilst maintaining high standards, the easier it is for us to invest. And we're seeing that in the US, we're seeing it in Canada, in Argentina, and then there's other countries that haven't quite yet gotten to that level of urgency. And the point that I make to those governments is the nature of competition globally is changing, and other companies are really taking urgent action to attract global capital. In any country, just like any company that stands still, is going to lose that race.
So more urgency, but does that mean that there's also more political interference then? We see governments taking stakes in mines, etc. So how do you navigate that?
So without a doubt, more interference and more government intervention in markets. And sometimes that brings risk with it, it brings uncertainty. But on balance, I would much rather have the level of current government support for the mining industry and the growing public awareness of the importance of metals and minerals versus the situation that we had a number of years ago where governments didn't want to meet with mining companies. They didn't understand the importance of the industry. They weren't doing the small things that they could do to facilitate investment. That's changed now. And yes, we're in a period of change. And with any change, of course, that brings some uncertainty, and governments are sometimes acting with a level of urgency that's one or two steps ahead of true understanding of how to finesse some of the policy outcomes. But overall, I think we're heading in the right direction.
Because you were saying now mining is in the headlines, it has a visibility and the interest of everybody. And in this environment of more protectionism, of reshoring, of industrial policies, again, I'm trying to get a sense of you of, is now harder to make business for you? The more trade barriers, more complicated geopolitics, or is it now a time of opportunity for a company like yours? So
it's both. There's heightened uncertainty, and uncertainty is never the friend of big investment decisions. Having said that, if you've got the right portfolio, which is something that we think deeply about, if you've got the right approach to investment, which isn't just the investments that you choose, but also how you go about them. So, BHP's strategy is built around being in the right commodities, having the best of the best assets in those commodities, sitting low at the low end of the cost curve, and then having a distinctive approach to social value, which is how we go about interacting with governments, other community stakeholders, in a way where through the way that we undertake our business, we're able to create the greatest possible value for the broad range of stakeholders. And that proposition, even in this world of heightened uncertainty and volatility, is pretty strong. And it's allowing us to navigate some of the risks that I think other companies are finding even more challenging.
So I guess, how do you build resilience? There's been these multiple shocks, one after the other. God knows what 2026 is going to bring. But how do you build resilience in the system?
So how are we seeking to build resilience? First and foremost, it's having the right portfolio of assets. So having a diversified set of commodities, being in the highest quality assets. I mean, at the end of the day, we're a cyclical business. There's going to be times when prices are high, like we spoke about for copper. Even in copper, higher prices will incentivize more investment. At some time, prices will come down again. And so we want to make sure that we're in assets that are at the low end of the cost curve, such that even when prices are depressed, we're the last ones left standing and we're generating good returns for our shareholders. But it's not just that. I think in today's world, you have to be part of the conversation. You have to be out engaging, including in fora like this, where you're able to hear perspectives from others across a range of industries, from a range of parts of society, to build a richer perspective on what's happening in the world around us, to then help better inform our strategy and some of the key decisions that we take.
We've talked quite a bit about copper, but all the metals are having some very extraordinary tendencies. We see gold and silver, gold up 60%, silver more than double compared to last year. Here again, I want to ask you, how sustainable is this? And do you see this continuing into 2026?
Well, there's nothing on the horizon that would suggest that underlying strength in metals and minerals pricing is going to wane in 2026, bar some unforeseen economic disruption. But for gold and silver in particular, in the face of economic uncertainty, in fact, that can be even more supportive for prices. So we remain optimistic about 2026. I think 2025 brought a lot of things that I don't think any of us foresaw at the start of the year. I don't expect that's going to change in 2026. I think we're living in a new world of heightened uncertainty, volatility, and we all need to be prepared to deal with that. And being prepared to deal with it comes back to how quickly we're able to take decisions and how effective we are at engaging to build a better, broader perspective of the world around us and to engage in a way that allows us to navigate some of the trickier situations.
Can we look at China now? China is the largest iron ore consumer. Of course, that's useful for steel. That's a big part of your business as well. We know there's been the ongoing property downturn in that country in 25. So how tough has business been on the Chinese front in 25?
So I know there's been a lot of focus on the property market, but in fact, the Chinese economy overall has remained relatively on track. The government there does such a wonderful job of tweaking the policy settings to keep things on track. And we're expecting that we're still going to see 5% growth this year. Important for my business is that the parts of the economy that have been growing most strongly happen to be steel and other metals intensive. So machinery and infrastructure, for example, as well as some of the exports. And steel production in China has now been over 1 billion tons per annum for 6 years running, which is a lot higher for longer than most market participants were expecting. Property gets a lot of focus. It used to make up a much larger share of overall steel demand in China, but because of the growth in other sectors, it's now only about 20%. So ongoing economic growth in China, including in metals and minerals intensive sectors, means that we'll continue to see strong demand for iron ore and other commodities.
And with the 5-year plan expected to be presented early 26, how much stimulus are you hoping to see in that plan?
So it's been interesting to watch China over decades now, where they've gone from big bang, strong pulling of the stimulus lever to a much more finessed approach to how they go about designing and then implementing stimulus. I don't think we're expecting that there's going to be any different approach going forward. To the extent that there is stimulus, it would be very targeted and well finessed to keep the overall, not just the economic growth on track, but the economic transition towards a more consumption-led economy on track as well.
You are reportedly in a current standoff with China's state iron ore buyer around negotiations for the contract for 26, including accepting more sales priced in yuan. So can you just give us an update on where you're standing in these negotiations?
So they call them negotiations for a reason. You get parties coming to the table with different perspectives on what a mutually acceptable outcome is. And every year you go through this process. This year it's been a bit more protracted than usual. But we have very strong relationships. China, of course, is a very important market for us. We have strong relationships with Chinese customers, and I'm confident we'll navigate a way through this.
When it comes to accepting more sales priced in yuan, is that something that you're open to?
So, in fact, most market participants already settle partly in yuan. One reason being that we have port-side sales in China, where we import into China and then sell out of ports in China. And, of course, it makes sense to do that in the local currency. Our preference, for no other reason than to keep things simple, is to settle in US dollars. But of course, that's always part of what we need to negotiate with customers as well.
As we see China's economy growing, its leverage is growing as well. And we see China becoming more and more assertive, and we see it around rare earth, etc. So again, how do you navigate this, and how do you do business in this context?
So it's, I think that's a true statement, but it's not just China. I think, China was perhaps a bit ahead of others in terms of understanding the importance of critical minerals. But you see that in governments around the world now. That's why we're seeing a resurgence in industrial policy amongst all countries, Europe, or the continent of Europe, the US, Japan, even Australia, which is where BHP's head office is. So we're seeing stronger industrial policy, and as we spoke about earlier, stronger and more frequent government intervention in different industries and markets. I think there's risks associated with that. The world has benefited from over many decades now from a world of freer trade. But that world of freer trade wasn't without consequences, and that's now the challenge that many of our politicians or policymakers need to deal with. And it's also caused, in some instances, the hollowing out of critical industries. So steps need to be taken to address that. We do see it in China, but we're seeing it elsewhere as well. And as a business, we need to be adept at how we go about negotiating and navigating that more complex world.
Just moving away for a minute from critical minerals to look at potash, because that's also a big part of your business, fertilizers. There's growing population needs, I guess. So how much of an opportunity does potash still represent for BHP?
So today the world has about 8 billion mouths to feed. By 2050, that will have grown to 10 billion people. In addition to that, as living standards rise, diets tend to become richer. They require more calories, more inputs. And so the world's going to need to grow a lot more agricultural production on a constrained footprint of arable land, which means that we need more yield. That bodes well for ongoing growth and demand for the three fertilizers, but potash being one of them. On the supply side of this industry, there's only two big basins, or world-class basins of potash in the world. One is Russia and Belarus, and we all know the risks associated with that. And then the other one is Saskatchewan in Canada. And through the foresight of generations of management past, BHP is fortunate enough to have the best undeveloped potash resource in the world. We're currently investing upwards of 12 to 14 billion US dollars in potash, developing 2 stages of a potash project in Canada. First production in 2027. It's a new business for BHP, and it's one that we're pretty excited about.
We've seen a lot of M&A activity between miners because of the heavy investment that we need, the search for extra assets, extra mines, etc. You tried a couple of times with Anglo, that didn't work out.
Yes.
What are you looking at now? Could you be third time lucky? Or is that completely out of the question? Or are there any more options out there that you are looking at?
No, that's behind us now. So the backdrop to this is, I mentioned earlier that BHP is the world's biggest copper producer. We've grown by 30% in the past 3 years. And we've got 4 big growth projects already in our portfolio, but we're so positive on copper. And given the size of us as a company, we have the wherewithal to both invest in these projects, but also to acquire new copper assets when we think there's an attractive opportunity where we can create value for BHP shareholders. And Anglo American was a company that has some attractive copper assets. So as you mentioned, we've approached them twice now, but it wasn't to be. And so we've moved on, and we're really focused on developing these growth options that we have internal to the company, as was the original plan.
Do you know what the issue was? Why the tie-up didn't happen?
Look, it's suffice it to say there's always multiple factors, but the reality is it didn't take place, and so we've that's in the rearview mirror now.
Right. Now, in this search for critical minerals and trying to find new sources, we're looking at new frontiers, potentially. Greenland has been in the headlines very much. Donald Trump is looking at this region very closely. It's been limited for a lot of regulatory reasons in that region. How closely are you watching at Greenland? So
we watch, new prospective jurisdictions very closely globally, and sometimes we actually engage in greenfields exploration. And Greenland is one of these, of course. It's probably earlier stage than you would find with many other copper-rich jurisdictions, but it's something that we continue to watch. And from a BHP perspective, right now we only have operating assets in Australia, Chile, a bit in Peru. We're investing in Canada and Argentina, but we're always open to entering new jurisdictions if the opportunity is large enough to warrant the added management effort. Well, I'm going to take you a little bit further in trying to find because some of the minerals, deep sea mining, that's something that has been talked about a lot. It's not allowed for commercial extraction in international waters. Some countries are mining in their own waters, but it's been paused, like for Norway, for example. So there's a debate that continues around that between the growing need of these minerals and the environmental impact potentially of deep sea mining. So I want to get your take on this. I think that's it. It's and I know there's already some deep sea mining taking place. It's just really important that we understand the environmental impacts, biodiversity impacts of engaging that. And that's not to say that they're known to be bad. I'm just highlighting the fact that it's such an important step. We need to make sure it's thoroughly understood, just like we would in mining on land. Now, from a BHP perspective, we've already got our hands full with what we're dealing on the surface before we would ever consider deep sea mining. So it's not something that BHP is looking to engage in. We watch it closely, of course. I think for the time being, it doesn't have a material impact on the markets.
But now I'm going to take you even further away.
You're going to ask me about space mining.
I'm going to have to. A lot of guys in Silicon Valley are talking about it, whether it's the moon, asteroids, etc. How much sci-fi or how much reality is that really?
Look, I think the economics for now and for the foreseeable future aren't going to be that attractive, certainly for the commodities that BHP mines. But who knows? These things are evolving rapidly, and maybe at some point in the distant future, that will become a reality. But I don't foresee that it's going to be within my lifetime.
Very final question, AI. We know this year has really been the explosion of AI, companies trying to adopt AI to improve their businesses, the investment into AI. How much is that helping you in terms of exploration as a tool as well?
So AI will benefit every single point of the mining, metals and minerals value chain, starting with exploration. And so one of the fortunate things for the world is that there are huge data sets of old exploration information around the world, because countries, or many countries, have done a reasonably good job of collecting and storing this data over time, as have individual companies. And so now what we're able to do is take all of those old data sets, digitize them, bring them together with kind of some of the latest human ingenuity when it comes to thinking about how the Earth's crust has developed, overlay AI on that, and it's allowing us to find deposits in areas that were previously understood not to have potential. So we found one in the past number of years in South Australia, one of the larger discoveries in the world of copper in the past few years, and that was an early application of AI. The potential is only going to grow from here. You then get into using AI to better design and execute these big capital projects. And if you think a $5 to $10 billion project, if you can eke out an extra 10, 20, 30% efficiency through the application of AI, that has big implications then for the cost of producing the underlying commodity. And you apply that same principle to how you extract the ore, you process it, and then you get it to market. And because we're a high margin industry, small increments of productivity improvement through AI can actually generate significantly more value for shareholders and others.
On that note, Mike Henry, CEO of BHP, thank you for everything.
Thank you so much.